Welcome back to Crown's Crypto Cave and a happy little Sunday morning to you over here from good old Mordor. Hey, how's your Mordor going this morning? Anyways, this will be a long-term analysis video for good old Bitcoin. Maybe we'll talk about Mr. Buterin as well, aka Ethereum Cone. And without further ado, let's get into the live scene right over here. All right, okay, so Bitcoin. As we do get to the end of the week, and we will be closing a new weekly soon, let's talk about where the big areas do indeed lie. So first things first, the main support, the big support has not changed at all in the last basically 10 months, right around 6150. As long as we're above there, I really do not believe that you're going to see one of those major lower targets, like 4,500, 3,000, whatever, whatever the fuck you hear out there in the world. As long as you're above 6150, this thing does still have the opportunity to essentially just go sideways and do a capitulation by boredom, essentially. Anyways, I'm going to talk about why that's probably unlikely though. Okay, so first things first, we are operating in a smaller descending triangle, which is inside of a bigger descending triangle. This guy right over here. Both bearish consolidation patterns typically resolve to the downside. Doesn't mean that they always do, but typically speaking, they do. Now, I do want to zoom into the lower time frames right here and kind of denote what happened in this past week, or sorry, this past month, really, starting all the way in September when you started getting this price action over here. You had this bearish consolidation, whether you want to call it a broadening wedge or a bear flag. I don't care what you call it. Typically resolved to the downside, and it was resolved to the downside. There's also a lot of very important things to be aware of this, because when we were consolidating in this area, in this broadening wedge-ish formation, you had a very orderly drop-off in volume, which to me is very indicative that, hey, you are in a bearish consolidation. When you see volume over here on this major red candlestick, increase, actually the biggest volume you've seen ever since really, basically half a year ago, or perhaps over here as well, which was also some heavy stuff, some hefty selling. That to me is a change in behavior in the short term. Now, while you are aligned on a major support, there's a few things to be aware of with what's going on over here. You'll notice that this dump right here has started from a much lower positioning than, say, this dump over here, this 7,400 level, or this 8,400 level, or this 10,000 level over here. Well, what do we have to look? Well, I want to look at the oscillators for that, our stochastics over here. Stochastics are still saying that, hey, we got some room to go downwards if we do want to go downwards. Compare that with the last couple times we've gotten down in this range. Let me just get rid of this that trend line right there. But down right around here, you can see right at this point right here, stochastics were literally already at the bottom when Bitcoin was hitting 6,100. Before that, right over, let's see, when you're kind of diving down into it right over here, you're actually at the bottom, literally right here, and then you took a stab lower. Sorry, I'm just going to show it right here. Yeah, okay, let's just line it up. And yes, this was your bottom right here, and then you actually took a stab lower on that kind of last drive right there. Very intense. Sorry, actually I got that one wrong. It's this one right here that it kind of stabbed down to, and then you made a lower low in price action, but a higher low in stochastics, which is actually bullish divergence from the stochastics over there. But essentially my point is that, hey, Bitcoin has a lot of room to go if it wants to. You can see that it's deep into the bearish control zone right here on the RSI, but it's not, it's nowhere near like the very over sold area, which I absolutely hate using. Oversold and overbought are memes in trading market. It does not exist. It's professionals are laughing at you if you use those words. It's silly. But what does happen, what people typically do refer to when you get below this level or above this level, is it's just hard to keep up that sort of momentum. So what's going on right now? Well, we're just kind of hanging around this area as Bitcoin does consolidate. You'll notice that there's absolutely there is no bullish divergence on the higher time frames right here. Anything above about a 4-hour does not show any sort of bullish divergence. Actually, sorry, a 6-hour does. Let's see if an 8-hour does. An 8-hour does not. An 8-hour does not. And so I do believe that this last kind of pop up over here is that bullish divergence that we were looking at over the last few days playing out. Perhaps right now, you can see that the 4-hour 21 exponential is providing resistance for right here, right now. And actually on this last little pop that we got up on especially Stamp, we got exactly to where the resistance we had kind of plotted out around 6350. Yes, indeed, 6350, which we actually had plotted on GDAX, but we didn't quite get there on GDAX. And it looks like I just got filled on some options over there. But here's your 6350 resistance right here. If you were to get above there, I'd be looking somewhere right around here, about 6,400. So if the 21 exponential is confirmed above on the 4-hour dildo chart, well, I will be looking somewhere around this range right over here. For the time being, I'm going to keep this trend line kind of right around here, we'll call it, and we'll see if this one does indeed confirm above it. If not, probably going to morph into some sort of a rising wedge. Again, I'm making major assumptions about price action, which is not a good thing to be doing. Would I just get filled on these options over here? Okay, I just sold a 5-lot, 6,500 strike, and I'll go over what I'm trying to do over there. I'm trying to put on a spread right now. I'm going to be buying the in the monies actually, and I'm short the perps. Anyway, so very, very important for the lower term time frames. You know, yes, you certainly could play out some of this bullish divergence over here. It would have more juice to go. Typically speaking, when you do see it on like a 4-hour or a 6-hour, you get at least like 200, 300 bucks. So we started right around here, right around 61.50. So we got up to about 63.50. That's 200 bucks. So perhaps it already has played out. So again, this close will be pretty damn important to me. When it comes down to it, overall, Bitcoin is in a position of vulnerability right here in the way that I look at it. And what do I mean by vulnerability? I mean that I'm on the defensive at all hours of the day, that the bottom could drop out any goddamn given moment. Now, with that said, 6150 has provided strong support for the last 10 months, which like I said, as long as it's holding above there, I don't necessarily want to be like stupid naked short. I want to be kind of ready. If it does break, if it does get confirmed below, then yes, I'll be pretty happy to follow through on that. But for right here, right now, people have not been too profitable shorting 6150, just like people haven't been too profitable just longing really in general. But fair enough. Overall, I would argue that because Bitcoin has come down and tested this 6150 level 1, 2, 3, 4, 5, do you call them this 6 or 7 derrieres now? Well, that is not a sign of strength, in my opinion. In my experience, the more times that you test a support, the weaker it gets. You use up your drawing power, and you can probably see that within the charts, right? Because each and every one of these bounces is getting weaker, as a descending triangle would imply. There's a psychology behind it. This first bounce was $6,000 from here to here. This second bounce was $3,000. This third bounce was $2,000, $1,000, $500. Maybe we get a bounce of like $200 or $300, which would coincide with that 6-hour bullish divergence. Very, very possible indeed. But I think you are noticing a trend right here. And you'll notice that of the bigger descending triangle over here, you actually have the perfect psychology of a descending triangle, because people are front running the upper resistance right here. You had 1, 2, 3, 4, or however many it might be touches over here, perfectly also kind of aligning with this red 200 simple moving average over here. And rejected on this last pass to 70, that got up all the way to about 7,400. The bears front ran it because they just wanted entries. They forwent better entries in exchange for just getting entries in general. And this last one over here, even weaker indeed. And if you put on a Fibonacci on it, you'd notice they front ran the 618. But yeah, I don't really like using Fibonacci's too often. It's kind of like my secondary, tertiary confirmation tool. That's why I use exponentials. Anyways, I'm gonna throw on a 10 simple moving average represented by the red line over here. What do I want to talk about on this one? Well, I've shared a video on a strategy with the 10 simple and the 21 exponential moving average, the red and the yellow moving averages over there. And when they cross, essentially when the 10 crosses up or down, you're essentially given a signal on the daily doodle time frame. Now, with that said, why is this important? Well, we went through a period of consolidation right here where you actually got faked out 1, 2, 3, and you got your fourth signal over here. So 4 times now. But if this starts to gain momentum from each other, these two moving averages, it's just like a MACD opening up, and essentially you kind of tighten it up over here. And if you start opening it up over here, that would just make me a little bit more confident in an actual breakdown, just more likely. Again, going off that metaphor of like building up kinetic energy. It went in trending markets. This is an excellent strategy. I told you to short right here, told you to short right here, told you to short right here, and it's like it didn't even tell you to get long right here. It literally kept you short all the way over to here. And it's great in bull markets too. It's great in trending markets, but as you saw for the last month, we were not trending, we were consolidating. And if we break that consolidation, it starts opening up and gaining momentum just like a MACD oscillator would, well, then it's very likely that you're actually gonna have that power, that oomph to break this down, especially when you have this sort of volume kind of coming back to the market after a month of basically nothing. And really, this is the first time we've seen that in quite some time overall. So when it comes down to it, that is very important to me. Let's go over to the 2-day doodle chart. Very, very important as well. 2-day doodle chart has the death cross right here, the green 55 cross on the downside of the purple 200. Same sort of strategy that we just talked about, that we just spoke about right here. And overall, as you can see on this 2-day, volume pretty damn good as well for that last little dump. 2-day stochastics getting rejected from getting above the neutral zone and turning back down. Again, saying that you have plenty of room while you're right on a major support. RSI is just getting into the bearish control zone over here. Bears have broken this symmetrical triangle that you had over here to the downside, and that is confirmed in my mind. Or sorry, in the way that I look at the oscillator right there, the RSI. Also, you're trending below your exponential, so that's not necessarily the best thing either. Let's go over here for the rest of this. I'm gonna put on a 3-day over here. 3-day stochastic, same thing. Not even able to get out of the bearish control zone and just turning down, like heading down like a fucking nosedive. And there's a couple of very interesting things about the 3-day little chart. Not only do you have the the RSI just getting in the bearish control zone, blah 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 blah. You already know that. But you'll notice this purple line down here. That's a 200 exponential moving average, and we closed our first 3-day dildo below it in a long time. I mean, we've closed a few below before, but you'll notice that there hasn't been one 3-day dildo that has both opened and closed below this exponential moving average over here. So we will actually have a chance on this one, which actually still does have another 2 more days. So a lot of things can happen, and as you can see, the bears haven't had too much success closing it below there. Really for the last like 4 or 5 years. It's been a while ever since this area right over here. But might I remind you, when did Bitcoin really start accelerating to the downside in 2014? Well, when you broke and started closing dildos below and using this as resistance. Look at this. It provided your perfect resistance for this and this drive right here, and then boom, down. So again, things to be aware of over here as everything kind of does smooth out and moving averages, jump on top of each other and rearrange around the price action. Again, very, 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 very important to the way that I do analysis. Let's go to the weekly over here. Weekly has the yellow 21 exponential crossing the downside of the green 55. Not a good sign. Anytime you have a lower period crossing below a higher period, I mean, it's going to be bearish by nature. You only have one other example right over here in 2014. Very similar scenario where you're kind of consolidating along this area right here, and then boom, down. Your blue 30 simple moving average slope is pretty aggressively downsloped as well. Not good either. Very, very nasty indeed. And what about our oscillators? We got the weekly stochastics opening down again, not good. Weekly RSI getting into the bearish control zone. Again, the only time Bitcoin's really even had comfort in the bearish control zone is really back over here in 2014. That's the only other example that we have of it. So a lot of things kind of aligning with that. You also notice that this cyan line right here, the 100 exponential, is kind of like the support currently. Although it is a little bit lower than that 6,000 level. I'm going to put on the inverted chart over here, the good old bias buster, or the Hagen Re chart. Anyways, you'll notice with this chart, what does this look like over here? I love using this inverted chart because it makes me feel like a Hagen Re, and maybe we see inverse copper handle, maybe we see Hero Priest, maybe we see Hero Kitty, maybe you actually see an ascending triangle right there is what I'm trying to get at. And if I do put on my drawing tools over here, we have the ramp, baby. The ramp is going to take you all the way to fucking Moontown, except the Moontown goes through the center of the core of the earth and then pulls you through all the lava, and then you meet the devil, and then you say, hey, okay, that sucked, and we'll just go through Mordor and then maybe go through here. Oh fuck, and then we end up at the moon with Bull Jesus. However, first things first, when it comes down to it, we need to invoke the power of Goat Jesus first. When it comes down to it, this does look like an ascending triangle to me. It does have the right volume characteristics of it. The measure move would be pointing us all the way down here, or all the way up here to about 4,100, which would align with the weekly 200 exponential right here. Lovely. Also, this nice horizontal as well, and also, it's the ramp. But what's going to happen is we just, it's like 2 rights make a wrong. Well, 4 ramps make a bull market. So that's what needs to happen. We just need 4 more guys, and then you can do a 360 and walk the fuck away. Anyways, when it comes down to it, this is important to me. You could also represent this as a symmetrical triangle, which would be a little bit more neutral, but that would also imply a target somewhere actually right around here, 3,500, if that were to be confirmed. So do we have anything else that lines up with this 4,100 level? Well, as spoken about, we have the 200 exponential right here. And we also have the 786 Fibonacci retracement coming in right around that 4,100 level as well. Okay, well, what else do we have? Well, we have the horizontal coming in around here, the measured move off that ascending triangle, or descending triangle, I suppose you would say, in the regular charts. And also, you'll notice this dotted trend line over here with the red arrow pointing to it. That is the 10-year logarithmic trend line of Bitcoin. That's never been broken in Bitcoin's almost 10-year history. And if Bitcoin were to approach it from right here, right now, it would actually be coming in right above this area, right around 4,700. So I'm not saying that you're going to get all the way down there, but we do have things pointing within that range is what I'm saying. So it's a possibility, again, if 6150 is broken. This is a major assumption being made. 6150 needs to be broken. Crown is not saying we're going there. Crown's saying, hey, if you break 6150, then get on, then get fucking ready, because it could be nasty. And again, I need to see this on a higher time frame, daily or weekly preferred, and we will have a chance to do it on the weekly tonight, as we do close one at 8 p.m. Eastern time. Not only that, but we do have, but wait, there's more. There's also, the good old volume profile over here, which I've showed a billion goddamn times, so people are probably getting really annoyed of this. But hey, here you go, the visible range coming in to save the day, or perhaps not if you're a bull, because the second that you lose this high volume node down here, right around, which would actually be right around 5,800 to be fair, there ain't nothing doing all the way till that mid to low 4,000s area right around here. So again, a lot of things pointing in that area. Just kind of wrap it up. We have the volume profile, we have the measure move of the descending triangle, we have the 10-year logarithmic trend line, we have a horizontal trend line, we have the 786 Fibonacci retracement, and we have the 200 exponential moving average on the weekly dodo time frame. So a lot of things kind of coming into this area right here right now, which would make me very interesting if we were again to break 6150. Again, got to cover my fucking bases there, because technical analysis is not like crystal ball reading. It's about crystal ball reading. No, of course not. That's Elliott wave. What technical analysis in the way that I do it is, finding out scenarios and their triggering points. Yes, there would obviously be a lot of support along the way down, and I think that you'd likely have some big bounces along the way down as well. Let's go talk about some of those areas as well. Again, making the assumption that, hey, if this were to break, well, the first one that makes sense is this guy right around here, right around about 5,800, 5,850. Below that, you got 5,500. Below that is actually, there is where you really start losing it. So yeah, that's kind of how I'd be looking at it right there. I do want to also point out on the weekly, we have been essentially rejected from the 10 simple moving average, this red line right here, once again, while getting this cross simultaneously. And we also have continuation in the way that I look at it from a more preliminary sense. I know that candlestick traders or dildo traders will actually take trades off this just based off the way that, we took out the low of the prior bearish engulfing dildo right here. Again, this is not like really high volume action, so I don't put too much weight on it, to be quite honest with you. That's why I didn't really put on a full trade. But when you have about 4 weeks right here, a very low volume consolidation area-ish dildo time, and then break it to the and then actually take out the lows on this guy right here. Well, that is continuation to me. You are taking out the low of the bearish engulfing by about almost $100. I would the biggest counterpoint would be this guy right here, is that there's just not that much volume on it, but we really haven't seen much volume on this whole move except for this dump right here. Overall, I do want to say, hey, what would make me change my mind? What would make me say Crown is an idiot? Crown should just kill himself, actually. Well, if you started taking out the bigger descending triangle resistance right here, which would actually now be around 7,000-ish area, I'd be a little bit, thinking, okay, well, maybe, maybe you got something else new going on. If you took out this high over here at around 7,400, I'd say, okay, it's very likely that you have something new going on. Above 8,000, I become extremely interested, and I start to above 7,400, I really start to take, big positions. Above 8,000, I start to take very big positions, and above 10,000, I'm all in. But as you can see, we're kind of hanging out the lows right now. So until that actually happens, I wouldn't necessarily be positioning myself for that. So again, a lot of big things to be aware of coming into this weekly doodle close. When it comes down to it, let's go look at some of the more fundamental parts of this market. Let's go look at Tether right here. Tether, very, 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 very scary indeed. Remember, Tether is essentially pegged to the dollar valuation, as that's kind of like their use case. They want to be worth $1 because a dollar is a great thing to be worth of. But now we got Trans USD, so TUSD. Sorry, TUSD. It's just like the real thing. So don't say it's not, because CNN is going to really not like that. And also all the social justice warriors, they really don't like it when you say that true USD is not a real USD, okay? Anyways, but for in the cases of Tether over here, you can see that typically it maintains its peg around, 4 decimal places within being $1. Well, as of a couple of weeks ago, it started actually finding some comfort being literally 1 cent below $1 at 99 cents. Then it became 98 cents yesterday, and now it's 97.5 cents right now. Quite literally almost 2.5 cents lower than where it should be. Now again, I'm not a financial auditor or anything like that. I don't know anything about the situation with Finex or Tether or whatever the fuck their relationship relationship is, or this and that. I don't know who Bitfinex is or anything like that. I don't know if I believe him either. But I can say there's a great saying in the good old game from some guy who I can't remember his name, but I really do pause about that, especially if you're alive, because maybe you're listening to that. No, you're probably not. So I'm just being an arrogant fuck. But what I do mean to say is that show me the chart and I'll tell you the news, right? Show me the chart and I'll tell you the news. And there is something weird going on over here. We're not just doing one of these spiky things over here, which, you know, typically gets bought back up and maintain the peg, you know, within really like minutes probably. But we're maintaining days below. This is their business. You know, Tether as a business corporation needs to maintain their peg. Why are they not stepping in to do this? Why? It's a question that I'm asking myself right now. So of course, I don't trade on any Tether exchanges. I really don't care to, like Binance, Finex, you know, whatever. Don't really care about that. I trade on BitMEX and Deribit, which I absolutely love, and I do have affiliate links in the description of this video if you're interested in that. Of course, you don't need to use them, but they actually do benefit you with taking percentages off your trading fees. But hey, you can just type it in your browser. Same fucking thing. Anyways, this does concern me over here, especially with the amount of time that we've actually been spending below here. Why is Tether not coming in and maintaining this peg? Very important. What else do we have to look at? Well, GBTC again. I just want to speak briefly on GBTC's breakdown below this horizontal level right here at about $7.10. We had a full gap down, open and close on the lows. That's very fucking bearish in my experience. In the lower time frames, you might be showing some bullish divergence down here. Maybe it might have already played out. Stochastics are pretty flatlined over there, so maybe you do kind of pop back up and test and maybe like test the gap at $7.10. But overall, this is not a good setup in the way that I look at things. If we go to the weekly, it's probably, yeah, the weekly looks just very nasty to me. It looks like continuation, just looks like it wants to spill over. All right, so let's go over and check out some Finex data over here. Let's go look at the longs and shorts of it all. We have about 35,000 open shorts, paying an average rate of 0.013%, which is not low. They were paying about half that earlier this week, but it's also not high. It's not high at all, really. We have longs over here at around 26,000 open longs right now, paying a rate of 0.0 almost 2%, which again, you know, it's higher than what the shorts are paying, but again, not that high. People who are saying that that's high are making a mountain of a molehill or whatever the fuck that saying is. Nobody even knows what any of these sayings are, to be honest with you. So again, when it comes down to it, we do have a significant amount of shorts going up pretty recently, as well as longs, actually. So there's going to be a nice little battle being duked out. So again, where would I be looking for that battle to be fought around? Well, going back on over here, I'd say the kind of area that we looked at, or that we kind of got rejected from right here, right around 6,300 is going to be that area. We do have lower time frame stochastics turning down right here. That's the hourly. 2 hour kind of losing momentum right there. 3 hour has crossed down, but this one can go either way, and I do put a lot of weight on that one. And 4 hours actually gaining momentum to the upside, so perhaps I do take that back. But again, you are now below the 20-minute exponential on the 4 hour chart over here. Again, I don't necessarily like it. So again, just more things to be aware of over here. Also, very, 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 very important as the day does come to an end, the CMEs will be open. The CME futures will be opening, and they closed Friday at 61.90. So that means that if Bitcoin is opening its price up above 61.90, probably going to pop back down, fill the gap, and then bounce back up, just like we saw last week. You know, and again, it's just that. I'm not saying that it's like a full-on reversal. I'm just saying you probably do bounce initially from it. I think it was like right over here somewhere, or where was it? It was somewhere over here. I forget. And if you open below it, then you probably rally back up into it and then sell back down off of it, which to me would actually be pretty damn indicative as well. But I don't think I'd make a move off that just yet. I'm already like kind of short. Again, this is my streamer account over here. I took off my my perps position because I was paying like way too much in fucking fees, so I had enough of that. So I re-put it on, and stupidly I tried to do 6,000 contracts at different prices, but I did different futures. So hey, I fuck up all the time too, man. I'm also playing the options over here. I just sold a 5 lot of these guys right here. I'm trying to buy the 62.50 strike call options to put on the spread. I'm bidding 190, so I probably shouldn't. I mean, probably no one's watching this, so fair enough. I'm gonna buy the 2220 right there just right now because why not? There we go. At least get one on the table. But I do want to get like another. I want to build that up to about 10, 10 or 15, and then put the spread on. I'll probably sell some of these 6,000 strikes as well. And as you can see, I'm already long the out of the money premium. To me, it's just really cheap. And I typically don't like doing something like that. But I feel like if you are actually going to have a big breakout, which I'd say is possible this week, especially if you do close below 6,300, well, then then that's actually one of the few situations I'd actually want to be long some premium, because you'll be making some money on the Vega. And as we kind of detailed below, if it does break down, it does have some room to go, no doubt about that. So again, just kind of explaining my positions over there. If you don't understand any of that, well, I'm actually having a lot of fun making the options program right now, but man, it's going to be so fucking long. Because there's so much bullshit rigmarole that you have to get through to just get people to understand this shit to begin with, and then the strategies, and then I can go into depth on like, hey, okay, as a market maker, I can tell you this is what I'm thinking, this is how you actually do this is the way to trade them, and that part's going to be really, really fun. But again, I got 5 more. I'll be buying these throughout the day when I get up to like 10 to 20, and then spread these around. Whether I do it with the 6,000 calls, sell those, or whether it's 6,500. I think I'm like trying to sell another 10 lot for like $50 or something like that, so that's another $500. That's all well and good to me. But again, yeah, so let's go back over here. Let's go look at the Finex wallet. This is Bitcoin's, this is Finex Bitcoin wallet over here. They used to be the #1 wallet in all of crypto land, meaning that they have the most Bitcoins like out of any fucking wallet about 2 to 3 weeks ago. Now they have quite literally less than 140,000 Bitcoins. Compare that with 225,000 Bitcoins that they had up here. Again, very, very strange. Why is there like some sort of mass exodus of Bitcoins off this exchange? It's like, that's like 25% now, isn't it? 25% of shit just leaving. You haven't seen anything like this. We haven't seen anything like this. We don't have anything to compare it with. It's just been kind of like small ebbs and flows. Now this red line chart over here, that's the wallet's value represented in US dollar valuation. And as you can see, it looks eerily similar to our actual spot chart. And when we put and we talked about at the beginning of the stream the broadening wedge that we kind of broke down from, or that we have the initial etchings of breaking down from. Well, over here you can kind of see it in Finex, and it's like it's like another leading indicator to me, or it could be. Again, I don't know how this plays out, but I'm looking at this, and Finex would be at the point where you're kind of like all the way back over here, which if you were to kind of equate with price action, that'd be all the way right around, just kind of eyeballing it. It'd be this kind of area right here, right around 5,500-ish area. So we're gonna find out very, very soon if that's a leading indicator or not. So yeah, just be aware. It's just another thing to be aware of. I do want to point this out as well. The MVT signal, is still, while it has turned down a little bit, it's still hanging above the critical zone. If you're not familiar with the MVT signal, it's the network value divided by the 90-day moving average with the day's transaction value. And what does that mean? Well, it calls tops really fucking well. And anytime that it gets above where my cursor is, it typically resets itself by going to where my cursor is right about now, around 50 or lower. And you can see that we're actually still well above the critical zone. So again, that also makes me hesitant to be taking, long positions. Let's go check out Google Trends. Bitcoin. Yeah. Hey, what's Bitcoin doing over here? Well, Bitcoin itself is actually around a search interest around 9 right now. So it's found support at the 8 level. We've gone to a higher time frame of 5 years. But I really want to see, it looks historically speaking like it really bottoms around, this 4 or 5 marker down here, which we haven't quite gotten to just yet, but it is getting damn close. So again, just kind of like, again, a secondary, tertiary confirmation thing. I'm curious what the general public is thinking about something like this, really. So yeah, what about HODL? Do people like HODL still? Is HODL still popular? Let's look at the past year, actually, past 12 months, because this is going to be good, right? Oh yeah, so people really loved HODL in October, November. That's when Nicholas Merton's here. Yes, HODL, great. All right, guys. So finally, Filicon has called me back, and I'm so happy. HODL is great. Oh, fuck. All right. And what about Rect? We have a divergence right over here, as Rect has overtaken HODL in search history in the whole world for the last year. This actually happened in March, by the way. So finally enough. People have been getting wrecked since March, which you kind of anticipate from the charts. So that would actually be kind of a counterpoint saying, hey, I think, we've been fucking people up for a long time now. Okay, what else do we have to look at over here? Well, we got, let's check out Mr. Beaterall before we wrap this bitch up. Okay, so Mr. Beaterall over here on the daily. I really don't like what Mr. Beaterall did this week. Again, a lot of people are looking at this, and I want to directly just, Superman, you bad man, and everyone else who's charting on, who's making fucking kindergarten charts. When you make a symmetrical triangle like this, you don't get when you make it like this, which was the correct way to be representing it, this is not a breakout if you don't have increasing volume above, what took you in there. So yeah, if your favorite Twitter or YouTube or fucking TradingView hero was stating that, well, I'd be very, very cautious, because they might not do this for a living, and if they do, they might not be doing it for much longer. But again, the right thing to do after that was redraw it, and then we actually got the major move right here, major volume coming into that. That was your tell right there, taking us back down to this 190-ish area right here. So again, when it comes down into it, I don't like what I see from Mr. Beaterall. Very, 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 very nasty indeed. But let's plot out some shorter term resistances and supports. We got one right here, right around your 21, right around 205 and 50 cents on Finex. And again, remember, Finex is trading at a different price than most other exchanges because the Tether premium, because Tether, it's so hot right now, Tether. But we got this guy over here at around 212 and a half. If you were to get up there, I'd say that something different is probably happening if you get up there. That'd be a little bit of a change of behavior on the short term time frames. Daily over here is kind of interesting to me, because you don't really violate the daily until you start closing daily dildos below about 185 and a half. But the weeklies is of particular interest right now, because and we can just completely redraw this whole thing right here. The weekly will look extremely bad to me if you do close below 195 today, later today. Or sorry, I guess it's like around 194 and a half. If I were to, maybe I'm not getting it exactly right, but right around here, about 195, we'll call it. Just take the mean of it. And just understand that it's somewhere within there. If you close this weekly anywhere below there, I would say this thing is very likely going to break down, and it's probably going to break down extremely hard. When it comes down to it, this thing, I believe, actually is or was in a rising channel over here. I don't know why no one was seeing this. I mean, everyone wanted to see the ascending triangle, but the symmetrical triangle, but no one wanted to see this. This would have a measured move point us all the way down, all the way fucking down to low 100s, I believe. Which we do have a little bit of areas of interest within there, but overall, this whole chart right here is not pretty. Whenever you have this rounded over formation, that's distribution over a very long period of time. All sorts, like every bad cross that you can possibly imagine on the exponentials. Let's see if the 2-day has them. 2-day has been death crossed for ages. 3-day, oh my god, the 3-day is almost going to get death crossed. I mean, maybe not almost, but look at the green 55 and the purple 200. They are so aggressively sloped to the downside. I mean, I haven't seen anything like this in a long time. So again, Bitcoin's kind of resting on its 3-day 200, whereas Beaterall's living well below. And this is what I'm concerned about if Bitcoin were to close this next dildo below the 200 exponential. Weekly got the 21 exponentials crossing the downside of the green 55 right over here. Just been continuation ever since. Basically a rejection of your 10 simple moving average right here as well. So again, another thing just to be aware of right there. So I think that's probably going to wrap it up for this one. I know people are going to be asking me, Crown, are there any lower targets in about 4,000-ish area? Yeah, there are, but again, I don't want to go over them like too much in detail right here. I don't want to scare too many people. Again, I don't want to be Mr. FUD or Mr. Fuck You or Mr. Mr. Perma Bear, especially not Mr. Perma Bear. But I want to be Mr. Opportunity, because with perspective comes opportunity, right? And that's the first area that I'd really be looking for if 6150 were to break. Again, if, major fucking if. And as always, I want to be very obvious with where would I know that I'm wrong. Well, if you start getting back above 7400, I'd really start to consider that this idea is wrong, and that maybe you just do kind of, go sideways for months and months, or maybe even the correction is over. I would say that it's probably less likely right now, but because as long as we're down here, it's we're closer to that scenario than not, but it has not been initiated just yet. Now has it? So again, as always, technical analysis a very difficult, very very delicate art rather than a science, which is why computers can't do it completely just yet. They're pretty fucking good though, I will say that. So yeah. At the end of the day, this is what I'm looking at right here. This is what I'm thinking. These are my thoughts. Again, the big areas to be aware of. Daily or weekly dildo close later tonight below 61.50. Big fucking problems. Above anywhere above about 63.50 to 6400. I would not want to be short above there. That's why I was buying those calls, or why I am buying those calls right now. Did I get? Yeah, I got filled on one. Yeah, I'm still. I'll get like another 10 or 20 by the end of the day. But at the same point in time, very, 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 very interested to see where the daily closes. Again, below 61.50, that's where I start to get very concerned. Above 63.50 to 6400, and again, I wouldn't want to be short. I wouldn't necessarily think that the downside is just over just yet. Maybe you are in for like a formal test of this guy over here. Classic scenario where you do kind of pop back up and fake a lot of people out. But until we actually break this level over here, I wouldn't really want to consider like, maybe this isn't the right way to be looking at it, and especially until you're over this guy right here. So again, that's going to do it for this morning. Hope you have a beautiful rest of your Sunday morning. Go to church, go Jesus, pray to your Go Jesus, and as always, take care, guys, and I'll see you in a live stream near you soon.